Hello my fellow freedom builders and welcome back to Mining Monday here at the channel. It is Monday and I know you've been looking forward to it, so let's get straight to the Mining Monday part where we are looking at gold, silver, copper, all sorts of commodities and mining. The program for today is quite simple. We're going to have a look at the gold, silver, copper and of course the dollar. US dollar, which is very important. We're going to look at the ETFs, GDX and GDXJ, and then a new one that we haven't looked at before, but is very relevant, and that is the COPX here, which is a ETF for copper miners. Then we're going to look at something called the CRB, that is the commodity index. I'll explain that later, and then I'll give you an update on the Cabral gold, the Palladium One that I've talked about before, and a couple of the copper miners that I also rounded before. So that is pretty much it. I'll get straight into it. It is a jam-packed session, so let's have a look at it. First of all, we have, of course, the gold. That is our main focus often. And as I said last week, let's just have a little zoom in here. Last week, I made the video when the gold price was just about here. And what I said was that I thought it was going to turn and that the next important point we needed to test was this line. Now, sometimes you can get lucky. This is not my normal prediction success rate here, because I am of the conviction that you cannot time the market in a way you get in precisely at the bottom and out precisely at the top. But we was at the kind of bottom here of the of this downwards trending channel. And there was this obvious area up here that if we were going up, then this would be the testing point. So sometimes you can get lucky. And right now it is like we are testing this point. I have drawn in two arrows here, and that is because we might get sent down here. I think the worst part is over for gold, if you ask me. And I've talked about that in a lot of the videos lately. But I think we have seen the worst part for gold. I cannot guarantee if we are going to go down here a bit again, but I suspect that we might make, if we go down here, I suspect we're going to make some sort of higher bottom and then break up. Because, yeah, that is the structure that I am seeing in the market, but that is not necessarily so. It could also be that we just have a couple of days here with just a little pause here and then breaking up. That is hard to tell. All right, that is the gold, and we can see on the silver that it actually did the exact same. Here we don't see the exact same obvious resistance area. So right now it broke down. This was last week here around just above 22. We are up here having a little break here, and we'll have to wait and see at what direction it moves in. If we look at the copper futures, we can see that not much have changed. The direction is just upwards, and it is hard to say if copper is about to have a bit of a break here, a bit of a retracement. We have gone up pretty much since back in October. The futures have gone up 23%, which is absolutely insane. And I would not be surprised if we shoot down. Right now it is around 350, and I would not be surprised if we shoot down, go down to around 330, something around here, just to get a retracement so that they can be taking a bit of a profit. And yeah, that would be the normal thing. You can see the copper market is filled with small retracements here, so I would not be surprised if we saw that as well here. As you can see here, the dollar broke this area here. I think it actually broke just last week here, or it was a couple of days old, this break. And what I say is that could be quite a significant breaking point for the dollar. This is the DXY, the dollar index. And as you know, if you've seen my videos, this is negatively correlated to the gold and silver price, since they are measured in US dollars normally. So when we see the dollar price go down, we normally see the gold go up. So right now, this little bounce up here is actually the opposite of what we see here. We see this little bounce or retracement down in the gold spot price here. So these two are correlating quite nicely, absolutely. So what I suspect is that we might see a bit of a jump up in the DXY up to around 91.50, maybe 92, and that of course would put some pressure on the gold and the silver. But if the DXY is then going down again, then we will see the gold and silver go up. The thing is with the dollar that right now the politicians in United States are talking a lot about stimulus and general helping economical packages. And what they're talking about right now, the Democrats and Republicans, is not what they call a stimulus package. It is what they call a relief package. And that is simply because there are so many million people in the United States that cannot even pay for food. And rent and all the basic necessities. So what they are planning, as far as I can tell, is some sort of $300 per week aid relief package to the poorest unemployed people in the United States. So this is not something that would really boost the economy, but it would make certain that people had enough money not to go to bed hungry. And then they're talking about maybe some other stimulus package, but that will be after the 20th of January, where Joe Biden is taking over the presidency. If or when we see the government, United States, start spending billions and trillions of dollars again, having Fed printing a ton of money, then that would definitely put a pressure to the downward side on the DXY, on the dollar. And that, of course, can help gold and silver. All right, let's have a look at the ETFs. We can see here we have the GDX, the majors in the gold miners. They bounced, as I said last week. They were just about to bounce from the bottom here. They've gone up close to this resistance area here, and right now it's just following the gold price. If the gold price continues up, this one will as well. But it's still trapped in this downward channel, so I would not be buying GDX just yet. The GDXJ is a bit of the same picture, but as we can see, the resistance area is now a support area here. It actually broke up, had a little retracement along with the gold. And the interesting thing, of course, is if this area will hold, or if gold will go up, then GDXJ will as well. Then we have the new ETF here, and that is the COPX, that is the copper ETF. And as you can see, it is just tracking the copper prices just nicely. It gave us a very good buy signal down here at the 6th of November. And since then, along with the copper prices, it has gone up these around 24-25%. So that is extremely nice. If you want to know what is inside this ETF, you can see here that there is this, I'll put a link to it, the globalxetfs.com. And as I said, I'll put a link to it, but you can see here that the first 10, the largest holdings are here, and you can get a full holding list if you want to as well. As you might remember, we mentioned a couple of copper stocks that you might have a look at. One of them was the Freeport-McMoRan here, which is in the top 10. And then, of course, there were also the Southern Copper that is not in the top 10 here, but it's also on the list here in the ETF. And these two we mentioned, but that was actually a third that we had in mind. We were actually considering that, and that was the First Quantum here, which is with the highest weight right now in this ETF. We had a plan of showing you that, but we chose not to. This First Quantum, it has mines all over the world, but 3 mines are producing the majority, that is 88% of their products. 2 of these mines are located in Zambia, and the last one is located in Panama City. So there is a very significant political risk here that you should take into consideration. This company has had some hard time due to a large amount of debt, but the company has just made a very solid plan to reduce that debt. It will be expiring in 5 to 6 big chunks over the next 6 years, so that'll be once per year. But by the look of it, there is absolutely no problem to service and refinance that debt with the current situation. But this is not a stock that we would own personally right now. And especially not if COVID closes down the world, and maybe the copper prices on that behalf will drop drastically. To my own portfolio, I can say I also just bought some Lundin Mining Corp, but I might touch on that in a later video. But this is the copper ETF you should be looking at if you want to be exposed to the copper sector, but do not want to pick specific stocks. Then this ETF can be quite nice. As you can see, it is following copper prices nicely. Has been way up around 60, and had you just bought and hold it, it would have been quite an expensive joyride here. So, all right, if we're looking at the two stocks we have been looking at, it is the Southern Copper. It is going straight up, and yeah, it has been a wild ride. I know some of you have taken some positions in both Southern Copper and also the Freeport McMoran here, and yeah, that has been a good ride for those of you as well. Now, as you know from our latest videos, we are talking about gold, silver, copper and so on, but basically they are just commodities. And commodities, if you want to have a look at that, I also have a little hint for you here, because one of the best indices for that is something called the CRB, a commodity index. As you can see, the Thomson Reuters core commodities. And that, we can see it here in the historic development here. And I'll just show you a little trick here in a second that we can do with TradingView. But first of all, let me just show you what it is. It is an index where a lot of the large commodities are put into. As you can see, we have some energy commodities, the crude, the heating oil, the unleaded gas, natural gas, and so on. They have altogether 39% of the weight. Then we have some agricultural commodities. We have corn, soybeans. We also have some live cattle. There's some gold, aluminum, copper down here, sugar, cotton, and so on. We even have some wheat and lean hogs and orange juice. So if you want to be exposed to the entire commodity markets because you think that is going to go up, then this CRB here is the place to look. Now, as you can see, the ticker symbol is a bit funny, TRGEFFCRB. But what we can do to get a little picture here as to if it is actually cheap, then as you know, we can divide it, for instance, by the SPY here. And what we can see, let's just have a look at it here, like this. What we can see here is that when we divide the CRB with the SPY, we get the two relative to each other, or the CRB relative to the SPY. And as you can see, we are right now at a very historic low. The CRB, of course, it oscillates up and down compared to the S&P 500. The last time before this time span here, the last time we were that low here was just before the big .com crash back in 99 here. And then we saw the CRB, the commodities, going stronger and stronger and stronger up towards and actually in the middle of the financial crisis here in 08. And then it has been going downwards ever since. And we are at an extremely low level right now. And a lot of experts are expecting a leg up here. Not necessarily to the former highs, but at least some sort of leg up. And we should not go far up here because before there is some very good earnings for us in here. So you can consider this one as well. The last point on the program for today is, of course, an update on the Cabral Gold and the Palladium One. One of the two of the small stocks we have, the developer, the explorers that we have been looking at the last weeks here. And if we start at the Cabral Gold here, then you can see the videos where we talk about it if you want the details. But what we can see here is that there have come some news out. And that is the last 12 out of 15 holes from Alonso, they were also dusters, which of course is a shame. But these reconnaissance drillings, they are usually equals to dusters. However, you need to put things into a bit of perspective here, and we'll try and help you with that. The Alonso target that they have been drilling at is approximately 1.5 kilometers wide, and it has no outcropping veins, so it is extremely hard to find these so-called goodie zones. Now, an outcropping vein means that when you are finding some gold in the surface, if there is an outcropping vein, it means that when they dig below that gold, they simply find the vein, they can follow it down into the earth, and that makes it all a lot easier to really get into this goodie zone. However, when there is no outcropping veins, it means that the gold they are finding in the surface has moved for some sort of reasons, geological reasons and so on, during ages. So that makes it a lot harder to find the right place to drill. So these targets they have been drilling, they have not had outcropping veins, meaning that they have had to look a lot more around to actually find the gold. Cabral will come back to Alonso again because they still think there's 80% chance, or the certainty that Alonso is a great target. Now, when we put that into perspective, they have drilled 15 holes at Alonso, and you can multiply that by 200 meters each time, and that cost them around $25 per meter. That's just $75,000 that are spent here, and that might sound expensive, but every time they drill new places, they learn more about the entire project, and a lot has happened since drilling started. Also, we have to remember that several low-risk targets have been identified at Machichi and Jerome North, and they just found a very exciting target close to the Medusa target as well. Unlike Alonso and Medusa, where there's no outcropping veins, these has outcropping veins and very high gold samples on top of older placer workings, so that is very exciting. So if you try to sum that up about Cabral, they have right now around 7 million Canadian dollars in the bank, and therefore fully funded to drill for a long time. Remember, they spent $75,000 on these 15 holes. That means they have spent approximately 1% of their current cash position on Alonso, but found a lot of new, more low-risk targets during this work. So they have 99% of their money left to spend on drilling. There are more than 30 targets where most are low-risk targets with outcropping veins or historical drill intercepts. They have 2 rigs drilling, a large contractor rig to drill low-risk targets, follow-up drillings, and their own very cheap rig to drill the more risky reconnaissance targets. Results pending for 22 holes at Medusa, which should be better than Alonso due to the better access. And also, they only planned on drilling 10 holes at Medusa, but they have now drilled 22 holes, which should indicate that they like what they see. So what we see here in Cabral Gold is some very interesting gold explorer. I know that we are a bit biased because we do have money in the stock, but when we look at the stock here, we can see that it went up, then it took a dive down here, and I know Lasse, our analyst, he's very good at this. He actually sold some of it up here, and we bought up again down here in the high 50s here. So it has been a bit down. But if you cannot stomach a movement like this, you should not go into these small explorers and developers, because they are some feisty beasts to fight with. And right now, I think that it is accumulating right now here, or the sellers have been pretty much, they are out of the game now. And I believe that what we're seeing here is a buy formation. And what I really would like to see is this area, this green area, to be broken. Let's say we see a 0.65, 0.67 this week. If we do that, I am very confident that the Cabral Gold will be moving upwards. Then a lot of you have asked me how far upwards, and that is simply impossible to say. That of course depends on the news from Cabral Gold, it depends on the gold prices and a lot more. So it is hard to say, but it is one of the gold explorers that we are very confident in some more upwards movement in. All right, then we have the Palladium One, and Yeah, this stock has kind of been destroyed. When we see from a top to a bottom here, 47%. And it was destroyed by warrant selling and, I must say, a lack of promotion or insider buying by the management. However, it's quite easy to see that most of the warrants are exercised now and the stock is doing better. And I believe that this was a bit of an extraordinary incident here, and I think that the price will move upwards. Now, this has simply been warrant selling and lack of, you could say, managers' support. Eric Sprott, as I mentioned before, exercised all his warrants and now owns approximately 20% of the company. So to sum this one up, the Palladium One, the warrant selling is over and pretty much all shorts are almost covered. The company has approximately 7 million Canadian dollar as well, and 32 million market cap, giving an enterprise value of just 25 million Canadian dollars, which is absolutely crazy. Drilling at its Palladium project in Finland, and they are drilling there and has just recently started drilling their nickel target in Canada. This means there will come a lot of interesting news flow in the coming month. They have a lot of great things going on, and if the CEO adds to his position, we would gladly double our position as well. The CEO does not have a lot of shares, which is a big minus, as we mentioned before, especially because he didn't use the last down pressure on the stock to buy up in the open market. So that is kind of a minus here. It has to be mentioned that he did exercise warrants the last few weeks though. So this is pretty much it. We are very confident in both Palladium One and Cabral holding our positions here, and are also ready to add some to this. About the copper, well, it is hard to say if it can keep going up. I would not be surprised if we saw, let's just see the copper futures here, if we saw some sort of retracement in the copper future. It has been running completely straight up here, and it would not be completely unheard of if it had some sort of retracement down in the 330, 340 area. With the gold and silver, remember that a lot depends on the DXY, the dollar index here, and if that has some sort of bounce up here, I suspect that gold and silver will be pressured a bit downwards, but at least my bias here is that the DXY will keep being pressured downwards, and that will lift the gold and silver, and then of course also a lot of the miners that we are looking at. All right, that sums it all up for today. I hope this was some sort of inspiration to you, and remember, this is not financial advice in any way, sort of form. This is just us looking at mines and commodities, and we'll do that again at least once per week in the Mining Monday. So take care of yourself, take care of your money out there, and be ready for some volatile times in the mining sector, no doubt about it. I'll talk to you again very shortly. Bye for now.